What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Today I'm going to talk to you a little bit about a Realbricks offering that's coming soon. You can't actually invest in this one yet, but it looks pretty interesting to me. I wanted to, I was pretty critical of their early listings. I'm still not sure how you get to this dividend yield because they don't really give us the information that we need to get there, and especially when you include their fees. 8% monthly management fee, pretty reasonable, but the asset under management fee, 0.25% per quarter, which ends up being 1%. But when we look at their offering docs, it actually says 0.75% assets under management fee. So I'm not sure where the disconnect is there. Most of their listings do show 0.75, but some of them, the last recent couple, have showed 0.25. I don't know if they intend to change it. When you click on the offering circular and the series overview right now, this property isn't included yet. And I think that's why it's coming soon, right? It's because it's not actually, they don't actually have the registered SEC docs. I'm not 100% sure that's what's going on. That's what it seems like to me. If you remember when I did some math on the other ones, I couldn't make it come out to anywhere close to that 6% unless I took out their fees. And so that was, that's one thing that is a little bit bothersome for me, is I want to understand the numbers whenever I'm trying to invest in something, because I want to make sure that it's sustainable, right? And if I don't understand the numbers, it's really hard for me to invest. If you remember, so far, I only own a very small piece of one of their properties. I did it primarily to get the free money that they give. I think you buy $50 or buy $100 and you get $50 free, something like that. Before I forget, please like and subscribe. In the description to this video, I have links to all the places where I'm currently investing in fractional real estate online, Realbricks included. You want to do your own due diligence on all of these platforms and on any of the properties. Just because I'm including some of those links, some of them are affiliate links, some of them are just links to the site. Some of them will give you some free money. It's free money. You have to invest and meet their terms of service. But again, you want to do your own due diligence on that. Also, in the description of this video, I have links set up to the Discord I created, where just a whole bunch of us, a couple hundred now, are in there regularly talking about several different fractional real estate investing platforms, this being one of them. And, you're welcome to join that. It's not a sales funnel. It doesn't cost anything. And if somebody's contacting you that looks like me to try to sell you anything once you do join, it's not me. Please report them, and I will boot them from the server. There have been several imposters. Okay, back to this one. So, like I said, I'm not sure about the numbers yet. We don't have the full SEC docs. So why am I talking about this? Well, this was really interesting to me. They mentioned in the email that they sent out about this, that they're getting it for 16% under market value. They're bringing it, they're buying it directly from the builder, which is D.R. Horton. What's interesting to me, this D.R. Horton is not a builder I've ever sold properties to investors. Typically, in my market, maybe KB Homes, but typically only Lennar sells properties that are cheap enough and in the right, that makes sense from a rent to price ratio perspective. Looking at this property with a purchase price of $215,000, if it actually rents for $2,150, that starts to make a whole lot of sense on a product that's a little bit nicer of a product. I was looking through the Matterport, and except for the fact that it has carpets in the bedrooms, which we don't like to do in any of our rentals. Other than that, it's a pretty attractive property for sort of an entry level rental. I didn't do any due diligence on, is that $2,150 achievable? This is really new property, and what's interesting to me, so obviously you want to do that before you buy it. Like I said, it's not even available yet. But what's interesting to me is if we're really getting that 16% from the market value. And so I dug into it a little bit. I found this is the subdivision that I believe this is in. It looks like It's on this piney trail, but this property is the exact same square footage. So I believe this is basically the same property. It's not the one that we're have under contract. I don't believe. I didn't see an address in here, and I think we probably won't get one until the offering docs are available. I could be wrong, and I might have just missed it, but I believe it's basically this property. And so this is $256,000. If you knocked off 16% of that, that gets us to the $215,000. So it's at least a 16% discount to what they're currently offering these at. And I also found, Zillow basically has this same floor plan and says with his estimate of $295,000. Obviously, this is just new construction in that area. Obviously, I don't think this $295,000 makes sense because they are, marketing them publicly for $256,000. Now, one of the things that you have to think about is a lot of builders right now, they'll market for one price, but they're really going to take a much lower price, especially if you're paying cash. In my market, I expect 8 to 10% below whatever they're putting, the price that they're putting it out at. If I'm paying cash, which we are, right, as on Realbricks, where it's an all cash, there's no leverage involved. And so I'm not sure. It seems to me that we're getting even a little bit more of a discount than that. But, I know, again, in my market, I've got relationships with some builders where, in addition to that cash discount, I know that they're going to give another, sometimes up to $25,000 discount in certain neighborhoods or on certain properties that they don't market it. It's not on Realtor or any of the sites that you look at won't have that cheaper price. But I know because there are certain circumstances where they just send us a list on a weekly basis. Hey, these are the ones we really need to move. And so, how real of a discount that 16% is, I don't know, but it's clearly a discount from their advertised market price. And $215,000 seems like an extremely reasonable price point. Now, one of the things I wanted to point out that, this is listed as being in Princeton, Texas, which, I think it is, the address is Princeton, but I don't think it's actually within, I think this up here is the city limits of Princeton. And this happens in Texas quite a bit, where you'll have like basically what's just unincorporated. It's in a county, but it's not in a city. And so it'll pick up the address from the nearest city. That seems like what's happening here because the city limit lines are there. And I froze Realtor. There we go. But, whether or not it's in Princeton, I don't think that makes that big of a deal. But I just wanted to point it out because it does show it. This was another one of the same floor plan. This was listed at $248,000. So, obviously that's already below the $256,000. But yeah, you've got another one here that's $256,000, and it's the same square footage. So, what's sometimes a little bit of a difference in the lot. Oh man, did my video freeze? Nope, it's going again. Hopefully this doesn't come out terribly. We'll see. Oh my goodness, we'll just wait for that. But so that's the biggest thing for, I've talked about this quite a bit for the platforms who are going. Oh, and so, okay, it's $215,000, but when we look at Realbricks expenses, there's $5,000 in expenses. That's actually an improvements. That's actually pretty reasonable, even though a lot of people, you buy new construction and you think, well, wait a minute, it's a brand new home. Why do I have $5,000 in improvements? Oftentimes, the home doesn't come with blinds. You have to put your own blinds in. It's not going to come with appliances. Sometimes you get an appliance package. Often there's different locks that you have to put on in Texas to be compliant if you have tenants that don't always come on new build homes, which is kind of interesting. But like the padlocks on the front, you might put ceiling fans, you might do some landscaping. So even though it is a brand new home, allocating $5,000 makes a ton of sense. But we're also spending $15,000 on the Realbricks sourcing fee, and they're saying $15,000 in closing costs and holding costs. and offering costs. Most of this is expense that if I just went out and bought that home, I'm not paying a bunch of closing costs, especially when I'm buying from a builder. They're typically picking up the vast majority of the closing costs, if not all of them. I mean, maybe not if they're giving you a big discount, so it's sort of a trade-off. But so when you add all that back in, okay, it gets us back to a total property cost of $250. Well, wait a minute. This one sold for $248. These ones are $256. So we're not really saving money as compared to if we went out and bought it. Well, we kind of are, because this $5,000 in improvements we'd have to spend either way. So maybe $245. So that's what got me excited about this. Is it looks like we're able to buy this property through Realbricks at a price that's pretty comparable to if we just went and bought it in real life. And here so they've negotiated a discount that's basically covering their expenses of, their closing offering and holding costs and their sourcing fee. Obviously, once we get all the info and we can really dig into it, once they have the offering circular out and we can look up the address and, make sure that we think the rent is fine. All of that stuff is going to be important. But I'm excited about the fact that they have found a way to create a good enough deal where we're not just paying too much. And that's what I was starting to say a minute ago. Most of the platforms like Realbricks, it's Arrived Homes, Arc7, most of the ones that are creating registered securities have so much expense built into each property that we're not able to actually, that it doesn't seem like you'll ever actually make money because you're spending so much on all that. Here, it looks like they've negotiated a deep enough discount that even with that, we should do okay. Maybe not amazing, relative to if I just went out to buy my own deal. But it seems like it's pretty attractive to me. If, like I said, I don't know what I could get if I just went to this property or this builder and said, hey, I want to buy this. I'm going to pay all cash. What kind of a discount can I get? But 16%, it seems pretty considerable. Based on everything that I know about, and like I said, this is not a builder that in my market ever has deals that make sense for investors. So it's tough for me to be sure. But it's pretty interesting. And then the other thing, so, that's, I can't wait to get all the details. And so we can dig into this one. They have actually two that they put out that are, that seem to be similar. And so really all we have to do now, in my mind, for this to be attractive for me is to actually dig into, the rental rate, the taxes, insurance, actually do our P&L and see, okay, how can we get to this 6%? Because if you remember from my earlier video about these guys, I had a very hard time coming up with that. And hopefully they'll put that info out and share it in the listing. I did, when I talked to them, they seem open to doing that. But I think it's just, it's just a matter of time. It's getting the user interface, like getting actually just getting it put on their website. They did mention that they're spending a lot of their time working on getting their secondary market launched. So that might be the issue there. And then, I want to also make sure, is this a 25% asset under management fee? Is it 75 or 0.75? I mean, that's a big difference, right? One is 3 times the other. And especially when it's the 0.75 quarterly, it seems next to impossible to actually spit out a 6% dividend, even with everything going perfect. The only other thing that I noticed about this that really struck me as odd is this estimated time to secure a lease, but I think that it's 150 days because they're they're getting this under contract, raising money, and it hasn't been built yet, right? It's going to be 60 to 90 days before the property's complete, and then the leasing will begin. And so then that started to make a whole lot more sense because when you look at this, they're saying, okay, it's normally going to take between, their average is 45 days, at least 7, could be over 90. That's one of the things that is a trap in some of the new build communities. So we have a lot of those here in town. And when I say here in town, it's here in San Antonio, because my team does sell a whole lot of, we sell a decent amount of new construction properties to investors. And some of the thing that we have to look at the most is it a community that's full of investment properties? And if it is, does it take us 6 months to rent it because there's so much competition? And so that's one of the things that, again, before I, purchased any of this, I'd want to do some due diligence on, okay, how many rentals are in that subdivision? How long is it taking for them to rent up? It's hard to get that detail without, obviously you can see how many rentals there are, but it's hard to see how long it took for them to rent without access to the MLS. And when I looked in my MLS coverage, I didn't see many listings that were, so I think this area is using a different one than what I have access to. I have most of the Houston stuff, most of the Austin stuff, but the Dallas Fort Worth area, I don't really have a lot of coverage. Some stuff pops up there, but it's not the main one that they use. So I don't know how I'd really figure out, what the days on market looks like as far as for the rentals go, because you can have a property that, the price is right, the rental rate is right, but if it takes you 3 months every time it goes vacant to fill it again, you're just going to lose money because it's too much. It's too long of a vacancy period. Anyway, that's all I wanted to mention. I just thought it was really interesting that it looks like they secured a decent discount, and if they can continue, if they can do that and actually meet their estimated dividends consistently, it's going to change my mind a lot on this platform based, compared to the first few times that I looked at them. Again, I'm not super excited about a 6% dividend yield, but in a market if we're in a market that I think is going to do well long term from an appreciation perspective and from a rent growth, and I don't think, and it seems like we're not overpaying, and maybe even with all their expenses built in, maybe still getting a little bit of a discount from market value. I start to see how this can work for a lot of people. Anyway, is this something? Is anybody else? I don't know who else is invested on Realbricks. I know quite a few people in the school community I'm in are, but is anybody, who else in the Discord has actually bought some stuff from Realbricks? If you're watching this and you have, I'd be very interested to hear, how it's going for you. So far, I've just had the one dividend right on the one property, so I don't have a ton of experience yet. But I like this. I like that they have, it seems like they've created a relationship with a builder where they might put out deals that make sense. And that's all I really want. That's my biggest criticism of most of these fractional real estate platforms is, and this isn't it's not an amazing deal, but I would be perfectly happy stacking this type of rental if I don't have to do anything, if they're running it professionally. And they're, like I said, as long as I'm happy with the market, it's not a terrible yield. And it's an unlevered yield, right? That's one of the things I have to keep reminding myself for a lot of these, which, unlevered means there's a lot less risk, right? We're not going to get foreclosed on unless it's for unpaid taxes or HOA fees or something like that. Anyway, that's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.